Hello traders, welcome back to the channel. This is Aftab and I welcome you to my YouTube channel. Today I'm looking at this chart and I'm practicing some of my previous learnings and just to recall some of the patterns, and if we don't practice the patterns frequently, then you start to forget them. And this is the truth. Many of you will like know this, and obviously, like if you don't remember the patterns, similarly you will don't remember the candlestick patterns, and uh, it will be a bit more hard for all of us if we forget the previous patterns, right? So, friends and the traders, first of all, the market took a reversal on this specific chart. Let's have a look at this. In a complete bullish wave, what prices did on this chart is they started to fall down from there till here. So obviously it is one point of concern for these bulls. But anyways, let's see when the bears got complete control of the market, what they did. So right here it is in front of you. I'm sure if you understand it, I think 80% of your work is done, because the time frame I have selected includes most of the patterns and structures obviously. So the first thing, obviously, the first pattern that I see is the initial one, a sudden reaction, I should say, sudden reaction. Because initially the market dropped in a bullish trend, so obviously it should be point of concern for most of the investors and the long-term traders and the weekly traders. So when I plotted the Fibonacci, what I have got is 1992 as a level, right? And what the market then did is a very nice ABCD pattern. So the first thing and the first sign of a trend continuation, we have got it. Are you getting my point? It's very much clear and easy. Let's zoom in. See. Oh, I came to the current market. Okay. See. This is point A, this is point B, and this is point C, and this is point D. Now, those of you who are thinking that, hey, Aftab, how do we say that this is an ABCD pattern from here, and how do we know? At this stage, don't go, like, control your thoughts and focus on what I'm saying. Forget about point A and point A and C, whatever. Just understand that this is an ABCD pattern and this is a bearish one. So if it is a bearish one, starting point will be A, then the B, then the C, then the D in a bearish market. How to trade it, I will discuss it later on, right? Anyhow, market is already closed, so no point of discussing how to trade it at this moment, but let's see. For the future, if such thing happens, how will you trade it? Definitely, I will tell you that. Okay. ABCD pattern got completed, but before that, sellers got this much profit, 2124 pips on this particular one. It dropped. Now here, let me tell you, is another pattern, a bigger one, I should say, bigger one. I will like to keep the chart clean, right? So that's why I deleted that Fibonacci. A sort of like a 45-degree angle, straight up wave. At this stage, we had no, sorry, not this one. We had this triangle pattern. See, so in a market, let's say in a market, when there is an ABCD pattern, if it gets stuck in a structure, this triangle pattern or structure, see, even if I extend it, but the problem was, you will say that when the triangle formed, then this ABCD was like the ABCD pattern, we have identified it before the triangle appears. But no, my friend, this point C to D and this triangle has a very closer relation at that point. Why? Let me show you. Even if we had know this data, still the market was like here, like this, okay? See. And these two candles, if I look at it on the H4, since this is the past data, it was not there. Or we can also say that we were on a sell and we got stuck into a triangle pattern. Like very happily you are holding a sell from there and holding it, holding it, holding it. But when you saw this triangle pattern, you thought, okay, it can go against me. But no, my friend, you can check back on the past data. In 80% of the cases, ABCD wins, right? And the triangle fails. So we have got, I'm not discussing if the triangle is strong or the ABCD pattern is strong. Anyone you want to trade, you can trade, right? But since this is in front of me, I'm discussing it. Okay, now the next thing. So as per the Fibonacci strategy, we have got one trade from here. And obviously the triangle pattern, I usually don't trade. So let's have a look at it. But those who trade usually take sell from the middle of it. You can also check it back, okay? It will 100% be working. And obviously the previous resistance zone, it was. But after all, I won my trade. So this was one trade opportunity. The second one was keeping aside this triangle which was recently broken. I don't trade the triangle patterns, otherwise it was a nice drop of 844 pips on the daily time frame in just 3 days. followed by a correction, and then obviously we have got a double top. And see, the trend is now just going to start. This time it has retested its own previous support to confirm it, that hey, are we for real seller, or it was just a fake rumors kind or type of rally. So they confirmed it. But by then we already have got the profits only if we trade with the support and with the Fibonacci strategy along with the um, what should I say, ABCD pattern. How beautiful market it was. Now here the over traders, those who over trade, they comes into the market. Since in this case I was holding the sell, so I didn't need it to focus on this, right? But I was closely observing. See, A, B, C, D completed. And also we had this one other pattern if we see, and a Fibonacci. But I guess yes, 61 was missed. So the market continued down, and a sort of channel was already established from right here till here. This data was not present back then. So a trend established, and we have got a same move. This ABCD as well, and this much. Like same amount of sellers. So a sell, nice, another drop of around 1700 pips. A little bit of false breakout. Here comes in the inconsistent traders. I will be deleting some of these lines, so if you want to take a screenshot of it, you can take it. Okay. Now this story ended here, and another story that was already there. This one. By then, we already have got this impulsive wave completed. This was the 61.8. See, a little bit of drawdown and a boom. And the market finally got a similar structure. A similar structure and a sudden drop. Now, obviously, if the market was coming back down, see, like I have skipped a lot of things right here because a lot of the things are keep repeating itself. A double top we have got right here, a smaller double top we have got right here. This one gave profit as well, this one gave profit as well. If we see, this is a double top, this one gave profit as well, and this is also a double top, and it has also gave profits. And the story continued, confirmed by another smaller double top, a break of 61.8, a correction, 61 of this impulsive wave. Let me show you here, a bounce, another retracement, and this is also a 61.8. See, approximately, and a final drop. A reversal, nothing was confirmed. Double top was confirmed right here. A double bottom, sorry. And a new journey began. This it did. Again, a recovery. How much was the recovery? At 61.8. From where did it reverse from? See, previous level. Very nice. And you just keep reading it again and again. Another double top completion. And another ABCD pattern right here. Double bottom. Confirmed. 618. And this is C to D. The break, and then I'm not sure from where these bulls come from. But obviously, another downward trend like this. Let me delete everything. Like this. An ABCD pattern. See. Till here. And a breakout obviously and a same move as this. Three drives pattern. First drive, second and third. A 61.8. C. And another completion. C. Isn't it simple? For a bullish, it started to give these things. Double bottom, retest, breakout. 61.8, double bottom. Market was on impulsive wave this. Going up this. Completed, market dropped. Dropped to which place? It dropped to this level. This one is left. Very simple. Market is trying to go back up. Take a fresh retracement from 61.8. See this. Fresh 61.8. It can become a resistance with us. This is A to B. B to C. And C to D. The completion 1874. These are the levels, these are the levels. How simple it is. And what I have studied right here in front of you is a data worth of 1 year on gold daily. I hope it will help you in some way. And obviously if you see this one thing I forgot, 61, yes, 61.8. So my friends, it's very, very simple. Try to trade with your open eyes and understand each and every move of the market. If you have any questions, please leave them in the comment section down below. Reach me on WhatsApp. Number will be given in the description. And make sure if you have any question in this video, feel free to ask me. I will try to explain it. Thank you so much everyone for watching the video. I will see you next time. Till then, take care of yourself. Goodbye.